It was a strange contrast this week between massive protests, riots, and looting in America's streets, while the stock market was soaring to new highs. The news media was consumed with all the legitimate outrage about the death of George Floyd at the hands of the Minneapolis police. But many peaceful demonstrations soon turned violent and caused a lot of looting and destruction in many American cities. Investors hardly seemed to notice as stock prices soared to new all-time highs. Let me catch you up on the events of the week and help to find you a way to refinance your car loan to a much lower interest rate. I'm Jordan Goodman, America's Money Answers man, and this is the Money Answers Week in Review. The number of Americans filing for unemployment claims rose by 1.9 million last week, leading to a staggering 42 million who've applied for unemployment benefits in the last 11 weeks. But the unemployment rate in May fell from 14.7 the previous month to 13.3, and 2.5 million Americans were rehired. That was a huge surprise to Wall Street, which had expected more job losses and a much higher unemployment rate. The number of corporate bankruptcies rose by 48% over a year ago, as some big companies like JC Penney, Neiman Marcus, and Gold's Gym all filed, and many more are expected. Many small businesses, which have been locked down by the coronavirus shutdown, now had an even further problem by being looted by the riots, and many of those businesses may never open again, which is a real shame. To counteract all this weakness, the Federal Reserve has been pouring trillions of dollars into the economy, and this last week the European Central Bank said they're going to add an additional 1.3 trillion euros to stabilize the European markets. So why are stock prices soaring in this economic environment? It's because the economy is reopening, Americans are being rehired, the coronavirus pandemic seems to be easing, and all that stimulus from central banks around the world is going into the markets and moving them up. For the first time all year, the initial public offering market revived as two major players, Warner Music and Zoom Info, came public and their stocks soared. If you're thinking of getting into stocks, the two best areas probably would be technology, companies like Microsoft, Google, or Facebook, and healthcare, with companies like Merck, Pfizer, and Regeneron, which are going to be benefiting as there are coronavirus treatments and vaccines of various types. One question I get all the time is, how can I lower my interest rate on my car loan if it's just too much for me to afford? If you're one of the many people who's lost income during the coronavirus shutdown, you should cut your expenses every way possible, and getting a lower interest rate on your car loan is one way to do it. Two of my affiliates at moneyanswers.com that will help you do this are myloangen.com and myautoloan.com, where you can either lower the interest rate or stretch out the maturity of your loan to get the payment down to a more affordable level and avoid repossession of your car. You can find links to both of them in the video description. I want you to have the tools and knowledge you need to improve your personal finances in these very tricky economic times. I'm Jordan Goodman, and this has been the Money Answers Week in Review for the week of June 1st.